Assalamualaikum, sir. My name is Rahim. Today, me and my groupmates are going to present about our second assignment for accounting. So let's get into it. So for the first part, I'll be explaining about the journal and the ledger. So let's get into it straight away. So for the 1st January, they started with cash and inventory, which increases the capital. So the cash and inventory will be on debit side, and the capital will be on credit side because both increases. So for the third one, there will be liability as inventory were bought on credit. So the inventory will be on debit because it increases, and the credit for account payable also will be increasing because it's on credit. So for the 5th January is sales were made on credit, so it's considered as our sales also, and it because it's on credit, they'll have account receivable, which amount is 6,000. So the cost of goods sold 3,500 from inventory, so we will debit it because it's on the SOPL, and the inventory will decrease, so it will be on the credit side. So for the 10th of January, the office rent were paid with cash, so the office rent account will be debited and the cash will be credited because it's decreasing. So for the 12th is laptop. Okay, so laptop is considered as asset, so it will be debited. So because this is bought on credit, so it will be credited the amount 2,500. So next, going on to the 15th of January, where they spend some cash for advertisement, so it's considered as expenses, so it will be debited, and the cash decreasing, so it will be credited. So for the 18th of January, receive some cash from account receivable. So when we receive some cash, so the cash will increase. So there is the receivable 4,000 in cash because that we receive the cash, so the cash will increase, which is on debit side. Account receivable will decrease because of 4,000 were paid by our account receivable. So moving on to the 20th January, where some cash was spent on office supplies. So if you look here, it's considered as expenses, or it will be debited, and the cash will be credited because the cash is going out. So moving on to the 25th of January, so the increase in cash as sales were made, so that means they made sales, so cash will increase, amounted 4,000, and the sales also increase, amounted 4,000, and the reduction as inventory goes out because the sales were made, so the cost of goods sold is 2,200. Cost of goods sold was 2,200, and inventory is 2,200, decreases. So the last one is cash decreases as payment were made for account payable. So that means paid with cash for account payable. So account payable on the debit side will decrease because we are paying it, so the cash also will decrease, so it will be on credit side, so amounted 4,000. So now moving on to the ledgers. So if you look here, there are the first one is cash, inventory, capital, cost of goods sold, account payable, inventory, account receivable, sales, office rent, laptop. So account payable, laptop, advertisement, and office supplies. Okay, so if you look here for the first one, cash is on the debit side, where there are capital amounted 5,000, account receivable 4,000, sales 4,000. On the credit side, office rent 1,200, advertisement 500, office supplies 500, and account payable, inventory 4,000. So after we plus both of the sides, we will get on the debit side, which is higher, so 13,000. So we minus, we on the credit side, so we will get balance BD 6,800. So for the inventory, the capital is 10,000, the inventory is 8,000. The cost of goods sold got 2, which is 3,500 and 2,200. So after we plus both of them, the debit side is higher, so we minus with the credit side, we will get 12,300. So for the capital, it's on the credit side, where cash is 5,000 and inventory is 10,000. So the balance BD for capital will be 15,000. So for cost of the goods sold, it's on the debit side, where inventory is 3,500 and inventory 2,200. So the balance BD would be 5,700. So next, moving on to the account payable inventory. On debit side, cash. On the credit side, inventory. So if you look here, the credit side, it's more higher, which is 8,000. So 8,000, when you minus on the debit side, you will get the 4,000 as balance CD. So move it to the balance BD as 4,000. So moving on to the account receivable, the sales is 6,000, which is on debit side, and the cash on the credit side, which is 4,000. So if you equal it, you will get the debit side will be higher, so you need to minus with the cash on the credit side, and the balance BD would be 2,000. So moving on to the sales. So for the sales, it's on the credit side, where account receivable is 6,000 and cash 4,000. So the balance CD would be 10,000. And move it to the next month, which is balance BD as 10,000. So move next to the office rent. So the cash is 1,200, which is on debit side. So if you equal it, you will get 1,200 as your balance CD. So now you just bring it to your balance BD on your debit side. So now for the account laptop, which is on the debit side, account payable laptop is 2,500, and on the debit side there's nothing. So if you equal it, you will get 2,500 so as your balance CD, and you bring it forward to balance BD. So moving on to the account payable laptop, which is on the credit side, 2,500 as a laptop. So after you equal it, you will get 2,500 as your balance CD. You bring it forward to 2,500 as balance BD. So moving on to the second last ledger, which is advertisement, where the cash will be on the debit side because it's expenses. So it will be debit side 500, amounted 500. So you equalize it, it will be balance CD as 500 because there's nothing on the debit side, and you just bring it forward to the balance as a balance BD 500. So moving on to the last one, which is office supplies, where the expenses are cash amounted 500. On the credit side, there's nothing. So when we equalize it, we'll get balance CD as 500, and we just bring forward to balance as balance BD 500, amounting 500. So yeah, that's all from me. Now I'll be passing to Afiq.
Assalamualaikum, my name is Daniel Afiq, and I'm going to talk about part 2, which is the adjustments. Due to the limited time given, I will talk about how to record this adjustment in both journal and ledger at the same time. So first question, 600 in wages remain unpaid for January. So what we need to do here is we debit wages 600 and credit wages payable 600. Second question, 1,300 paid on January 10 includes February's rent 600. So what we need to do here is debit rent 600, debit prepaid rent 600, and credit cash 1,200. So third question is depreciate the laptop purchased on January 12 at a rate of 20% per annum. So what we need to do here is RM2500 we times by 20%, which we will get 500 per year, then divide it by 12, and we will get RM41.67. So here the double entry is debit depreciation laptop 41.67 and credit accumulated depreciation 41 ringgit and 67 cents. Okay, so last question is set up allowance of 5% on the accounts receivable balance as of January 31st. So what we need to do here is 5% times with 2,000, and we will get 100. So what we need to do here is debit account receivable 100 and open a new account, which is bad debt expenses, which is 10, which is 100, and then credit it. So that's all from me. Thank you.
Assalamualaikum and hi sir, my name is Muhammad Nabi Iskandar, and my matrix ID is 012024092335. So today I'll be talking about the trial balance, the adjusted trial balance. Here is what it looks like. As we know, trial balance has two columns, which is debit and credit, which is debit on the left and credit on the right side. So the goal for trial balance is to get the final amount at the bottom equal. So we know trial balance for the debit side, we have cash, inventory, cost of goods sold, and so on. So yeah, it was pretty hard for us to get the answer at first, but we managed to find the small mistake that we did, and eventually we got the final answer, which is 32,242. It's equal for both sides. So yeah, that is it from Trial Balance from me. Thank you, sir.
Hello there. My name is Akimi Al-Habib Mustafa Kamal, and my matrix number is 0120240923338. So now I'm going to talk about my part, which is part 4, Statement of Financial Position, and another one is Statement of Profit or Loss. So before I start with my part, we need to thanks with our friend, which is Adam Iskandar. He already explained about the adjusted trial balance. So now I'm going to talk about my part. So QPS Trading Sdn Bhd, Statement of Profit or Loss for the year ended 31st January 2023. Okay, at here, as you guys can see, the rule that has sales, return inward, net sales, cost of goods sold, opening inventory, purchase, and the others is basically based on the format. So let's see. And here also we have 3 columns. Okay. Okay, for the sales, we need to put on the right side of the column, the last column, which is 10,000 ringgit. And we need to minus with the return inward. But we don't have return inward, so we need to put 0. So the total of net sales is 10,000 ringgit. So after that, we need to minus it, net sale minus with cost of goods sold. So for our opening inventory, we need to put on the middle column, which is 0 ringgit. And our purchases is 5,700 ringgit. We need to put on the left side of the column because we need to minus it with the return outward. But our return outward also considered as 0 ringgit. After that, our net purchase is going to be 5,700 ringgit. So, and do not forget to add with the Audi, which is, that is for the BM, but for English, I'm not sure, but we can call it as CDI, which is carriage inward, duty on purchase, insurance on purchase. So for 3 of these, there's no digit at all, so it's going to be 0. So we need to bring our net purchase to the middle column, and we need to plus it with opening inventory, but there's no opening inventory, so we need to bring the net purchase to the last column, and we need to minus it with the net sales. So net sales minus with net purchase, 10,000 ringgit minus with 5,700 ringgit, we're gonna get 4,300 ringgit. So that is for our cost of good purchase. And so for the cost of good available for sales is 0 ringgit. And the closing inventory, we need to minus, but we also do not have a number for closing inventory, so it's going to be 0. So our gross profit is 4,300 ringgit. So after that, we need to plus with other income, but we do not have other income. And then we need to minus it with other expenses. So for the other expenses is 1842. So we need to 4,300 ringgit minus with 1,842 ringgit, and we're gonna get 2,458 ringgit, which is our net income. Okay, so now I'm gonna talk about our statement of financial position for QPS Trading Sdn Bhd as at 31st January 2023. So there's also the same format. I mean, not the same format as for the SOFIAL. Is just a different because SOFP is like non-current asset, equity, and the others. So there's also 3 columns, which is cost, accumulated depreciation, and net book value. So let's see our non-current asset is 2,458 ringgit, and we need to plus with our current asset. There's going to be 22,000 ringgit, 22,100 ringgit. We add on both of this, we're gonna get 24,000 ringgit, 24,558 ringgit. So that is our total asset. So now we need to add on for the owner equity, non-current liability, and the other one is current liability. So our owner equity we get for 17,458 ringgit, and our non-current liability, there's no number, which is there's no non-current liability. And now we need to add on with current liability, which is gonna give us 7,100 ringgit. So 17,458 ringgit from the own equity, add on with the current liability 7,100 ringgit, and we're gonna get 24,550 ringgit. And the number is gonna be same with our total asset, which is total asset equals to total liability plus owner equity. So that's all from us. From me, I mean. Okay, thank you very much. So now I'm gonna pass to ID Ashraf.
Okay, thank you, Hakim Al Haq. So now I'm gonna explain a little bit more about part 5, which is bank reconciliation. Okay, so first, they given the balance as per bank statement, and to doing this, you have to know the format, which is simple like the financial statement and the trial balance. They have a credit and the debit side. So for the first, we put the balance as per bank statement, and then we plus with the deposit not reflected and minus with the outstanding check. So then we can get the adjusted bank balance. And after that, we calculate the balance. We calculate the adjusted book balance, which is they given the balance for company cash record, and then we have to minus with the bank service charge and minus with the return check, and then you get the 7,300. Okay, so next. Okay, so for the part 6, we have inventory evaluation, which is we have to do the FIFO method, first in and first out. Okay, so the formula, for format, it will be like this. We have a date, we have in equal to the purchase, we have out equal to the sales, and balance. Okay, so for the FIFO method, if you want to take out your inventory, if you want to deduct your mark, you have to you have to minus from your first batch. If you have a lot of that, first, second, and third, you have to do with the first one until it finish, until it's zero, and then you can get, and then you can continue with another second batch. Okay, so in this FIFO method, we're doing this to find the closing inventory. So in this question, the closing inventory should be like 5,900. Okay, so that's all from us, and thank you for listening.